Welcome to It's the Economy. Money Control has just reported that Jane Street has deposited 4,843 crore rupees with SEBI and can start trading. But this isn't acknowledgement of guilt. The Wall Street Trading Company will eventually challenge SEBI's order in SAT. What are its chances of winning? Well, SEBI has accused Jane Street of manipulating the constituent shares of a bank Nifty index by pumping up the share market prices and luring retail investors to go long in the option markets, and then by the end of the day dumping the shares in the cash market and thus making huge profits on their own sell options, put options taken in the options market on Bank Nifty index. Now, to understand SEBI's order over the weekend, I spoke to one of the best experts on the field of options trading, Ashish Gupta, the CIO at Axis Mutual Fund. Ashish was the first one to point out in a paper called Gamification of Equities the unusual rise in volumes in India's index options market. I began over the weekend, this interview was over the weekend, I began by asking him the central question. Jane Street claims it was doing standard index arbitrage trading. But SEBI has shown with a mountain of data that Jane Street pumped up share prices in the morning and dumped them in the last hours so that it could profit in the options market. Does SEBI have a solid case to prove manipulation? That's my first question to him. Here's the chat.
I would not like to comment on a particular entity's trading pattern, and frankly, that information is visible and available only to SEBI, right? And they have talked about it in their order. The concern we have had, and the paper you mentioned that we wrote, was just that how large and disconnected the options market was relative to the cash market, right? If we talk about options really as a derivative instrument, it means that it has to be connected with what is happening in the underlying market, which is the cash market. And therefore, there has to be some similarity in both the volumes and the pace of growth in the what you see in options, or more broadly in derivatives, and what we see in cash market.
Yeah.
Now, over the last 4 or 5 years, we had steadily seen the disconnect increasing, and as you mentioned, on a notional turnover basis, the option market notional became multiple times that of the cash market, right? If you, on the other hand, look at the other derivatives, right? If you look at the futures market, so the futures market is, of course, also larger than the cash market, but the future market notional is really 2 times that of the cash market, right? And this was at its peak nearly 400 times. Notional to cash has since then moderated. Now, one of the big drivers of this was what was happening on the expiry day, what was happening on the last day. And again, as option pricing goes, there are 2 elements to it, really. One is the amount of notional that you are taking exposure to. And the second is the time you are taking that exposure for, right? And on expiry day, the time factor is so low that the price of the option is much, much lower, right? And that is what was really attracting retail investors to come in, because with a small investment or with a small size bet, you could actually look to take exposure to a large market. And if you recollect, SEBI had published this data last year about what proportion of total option market volume was actually happening on the last day, right? And in some instances, 80-90% of the volume was actually happening just on the expiry day, right? And so that kind of begs the question that if someone is looking to hedge exposure, why is he looking to hedge the exposure only on one particular day? Right?
And for half an hour.
Yes,
that's
right.
true.
So clearly, and we had seen in terms of the number of retail participants and the kind of retail participants that were coming into the market, that more and more younger people, more and more people from tier 2, tier 3 towns were getting attracted by really the leverage the options market offered.
Fair enough.
And that really led to the outside growth of the options market versus the cash market.
Yeah. No, all those points are taken. I'm sorry I'm dragging you back to the Jane Street order. I understand that you will not comment on another entity, especially when you don't know what they do actually. But the reply of the, we know we have the SEBI order, which is very, very detailed in terms of the number of shares purchased in the morning, number of futures options, futures purchased in Bank Nifty, and amount of options sold at the end of day. Those are very clear data given. Can that be explained as plain arbitrage, which is what some legal entities are saying? That this is just plain arbitrage. Is it arbitrage? But then, numbers are so different.
Yeah. So, frankly, arbitrage really is, and we in our mutual fund also run our arbitrage fund. Arbitrage really is when you take two positions of same, or if not same, similar size in two different markets, right? So theoretically, you can be doing arbitrage, taking a position on NSE and selling on BSE, or taking a position in the cash market and another position in the derivative market, right? Because in arbitrage, you're trying to play the spread between two different market or two different instruments, right? If the size is different, then clearly on one side you are taking a directional position, right? So then it is not really arbitrage, but it's a directional view that you are taking.
Yeah, that is the point perhaps that people are making. The other issue that some lawyers have made, or maybe some opinion makers have made, is that this may be unethical but not illegal. It may be aggressive but not illegal. Now, if you move the constituents of Bank Nifty in one way, and very clearly SEBI proves that in the morning when the prices are going up, they had 35%, 37% of the amount of trades, volume of trades, gross traded value. And likewise, even in the last half hour in the cash market, the positions taken by this entity was, 25 to 30%. Then can you really... I mean, isn't it very obvious, therefore, that they were driving the market?
No, so I think that comes out in SEBI's order. And actually, if you see it a bit more holistically over the last 9 months or so, SEBI has been trying to address some of these issues, right? One attempt, for example, has been to kind of tone down this over-exuberance of options trading by, I think, October last year, they came out with measures to increase the lot size, right? So really to dissuade...
No, 1 minute, Ashish. I perhaps didn't complete my question. When you look at the amount of shares with which that was sold in a particular segment, it does not give the sense of just unethical. It seems to give the sense of illegality. Do you want to comment on that? Because that seems to be the constant word. It is aggressive. It is not illegal. But then if you move with such intent, then it looks illegal. Your thoughts?
Yeah, see, frankly, intent is for the legal experts to kind of prove. What I'm saying is that why such strategies could work was the proportion between cash and the derivative market was very, very different, right? So cash market, as we discussed, is relatively smaller compared to the options market. The second part, and which is that in some of the indices, the index constitution is such that it is very concentrated in a few stocks, right? And in Bank Nifty, literally two banks account for more than 45% of the index weight, right? So then such strategies can kind of come out and really try to
Yeah, they will work. I agree. These strategies
right?
will work. So the
I think,
answer, Ashish, is the answer,
yes.
therefore, to not have weekly futures. I mean, what are you hedging in a week? If I buy Kotak Bank today, what is going to happen in 1 week that will change? I mean, it may happen once in a way when there is a monetary policy or something. But as a rule, do weekly futures serve any hedging purpose?
See, I think it's a question that one needs to look at. Like, market has several instruments, right? And they are important. And market liquidity is created by investors, by hedgers, by speculators, right? So you need a certain speculative element also in the market, right?
Yes.
So maybe the proportion of a monthly future versus or monthly option versus a weekly option, the number of investors versus speculators is very different. But for the well-functioning market, you need all kind of participants. I think it is important that we have the regulatory framework which kind of prevents really abuse of the system.
Yeah.
I think we have seen a fair bit of data consistently, and even last week, SEBI came out with data that there were outside losses that were getting incurred, and again, not directly correlated to the other order, but it kind of emphasizes the need for it to act. And there have been several regulatory steps that have been taken. And on top of that, there is a supervisory or enforcement action that is actually coming in. And I think net, I don't disagree with SEBI that it needs to act on this. If you see the latest number, it is almost 1 lakh crores of losses. That,
fair enough. But what would you
put it in context?
Yeah, no, sorry, I'm interrupting because I'm running out of time. But what would your advice be? What more can SEBI do?
So I think there are various ways to control this further. I don't think necessarily you need to take out the index option, but I think having a broad-based index, having some degree of really limiting the retail participation, whether it is from lot size increase, whether it is from kind of having some side of accreditation of investors that is needed, because in really none of the large market options are available to all retailers to trade. And it is not just a market issue. I think it is a macroeconomic issue. Because the loss is so large, right? To put it in context, 1 lakh crore is about 6% of household financial savings in India, right? And remember, we have on a previous show talked about why household savings not growing and why bank deposits are not growing. So this is actually a large number in that context, 6% of household financial savings.
That's a fair point. Ashish, we're out of time, but thank you very much for joining me. Just a one word, you don't think FPIs would be worried about this regulatory action, would they? This is not going to scare them.
So I think, frankly, there are various kind of FPIs, right? So there are these high-frequency traders, but there are also we have multiple long-only and hedge funds that have actually been investing for a long time in the Indian market, and some of them actually have also been concerned. So when I wrote that paper, several people were concerned that option market is so disproportionate in India.
Okay. Well, so this was a conversation I had to have over the weekend because Ashish was traveling today. But I think Ashish is making a couple of points. Whether it is manipulation or not is one issue. We cannot allow it is the other part, because it's taking away 6% of India's household financial savings. That's an important point. And meanwhile, when we were speaking, we got the clarification from SEBI. I had written to SEBI asking whether Jane Street had deposited the amount. Apparently, they have deposited the amount, and they've asked for certain conditions placed on them to be removed so that they can start trading. SEBI had, in that order, not highlighted exactly what those conditions are. So we await more clarity on exactly what are the conditional restrictions imposed on them. But to be sure, Jane Street will be aware that given SEBI's order, SEBI's definition of manipulation is now very clear. If you account for 25 to 37% of the market, of the cash market, and are trading above the last traded price, so that the market goes up in the morning, and likewise in the last hour of trade, you are accounting for 37% of the cash market, and you are trading below the LTP, below the last traded price, you are deliberately pushing the index down. SEBI will look at it as manipulation. That is very clear. So even if they are allowed to trade, which looks like on the cards, perhaps the same will not be repeated, because now Jane Street knows SEBI's mind. Exactly what the conditional restrictions are, we will come back to you with those details. That's it on Bazaar. Chartbusters up.